Hi everyone, this is Jason Birak of Wall Street for Main Street, and this is your video blog for Sunday, August 8th, 2010. Today I wanted to talk about depletion. Depletion is the main enemy of natural resource companies. For those of you who want to get involved in investing in natural resource companies, you need to understand the whole depletion concept. So let me take a few minutes to explain it to you, if you do not already get the idea. Depletion is a concept that is basically very unique to this sector, and let's give an example of depletion. Depletion means, let's say we're ExxonMobil, and we find an oil deposit, and there's 50 million barrels of oil there. And during our our plan to get this production online, we plan that we are going to produce 5 million barrels of oil for 10 years. And that will use up all of those 50 million barrels for production. That would be depletion, because each year we'd be depleting 5 million barrels of oil from our 50 million barrel reserves. Okay? So this is a very unique problem, whereas if I'm, an Apple computer or a Microsoft, you're more dealing with bringing new and different products online. Because theoretically, you could, if you're Apple, you can make computers and iPads and iPhones for forever. It's just your competitors are going to come in and they're going to mess with your profit margins. So that's why those guys have to continue to innovate. But that is quite a bit different than natural resource companies. So as a natural resource investor, one thing you need to really understand is that these bigger companies, the big mining giants of the world and the big oil and gas companies, their main enemy, besides competing with the other firms, is also they're competing with depletion, which is extinction of the company. Because if they don't replace those reserves, they're not a natural resource company anymore. So what we are running into right now is an overpopulation problem in the world, and the planet Earth really doesn't have infinite natural resources. So this is a major problem that's going on right now. And yes, there are a good amount of natural resources still available, including oil. But we're spending a lot of time and money and also a lot of oil to find more oil. It used to be that we could stick a hole in the ground onshore and find a barrel of oil. So we weren't even wasting a barrel of oil to find a barrel of oil. But that's not happening anymore. In fact, we're wasting at least 1 barrel of oil now to find the next barrel of oil. So now you see how inefficient things have gotten and why peak oil. Peak oil is not that we're running out of oil. Peak oil is that we cannot replace the production. We cannot continually increase the production infinitely. And also we cannot continue to replace the reserves infinitely. So peak oil, for those of you who believe or don't understand it or don't know it, if you've heard the term before, what it basically means though is that we cannot replace, like I said, the production. So the United States peaked production in about the 70s, and they've struggled to continue to keep the production rate from declining too much since then. And that's a major problem. And reserves are also declining. How many of those big oil and gas companies are replacing all the reserves that they're producing? Are they bringing more reserves online? So this is a major problem and for the companies themselves, and it's also an opportunity for you as an investor. This means that if you own shares of, say, an ExxonMobil, instead of necessarily investing your dividends back into ExxonMobil, you might want to not do the DRIP, which is the dividend reinvestment program. You might instead, to get a better return, if you don't need dividend income, you might instead want to take those dividend profits from ExxonMobil and go and buy smaller oil and natural gas companies with reserves and production. Because ExxonMobil and these other companies in the different natural resource sectors are going to have to replace production. This is also true, like I said, in the gold sector. A lot of these companies have had a lot of gold mines that have been operating for the last 10 or 15 years, long life gold mines. But in another 5 or 10 years, these mines will be out of reserves. They'll produce all of those reserves. And these companies which have the cash flow, they're gold mining companies, and they have the cash flow. But to remain gold mining companies and for the market to still reward them, they're going to have to reinvest that cash. They are going to either need to go and pay for larger exploration budgets on their own, to go and find more gold and silver around their existing mines and properties, and some companies do a good job of this, but others just take that money and they go and buy another company. So once you understand the business cycle in the natural resource sector, it becomes becomes a lot easier to profit off of it. So hopefully this gave you guys a good explanation of exactly what depletion is. Depletion is the enemy for the company, but it is a friend for you, the investor. That's the best explanation I can give to you guys. And you can go check the math. These mining plans that these companies have, unless they pour a lot of money into the exploration budget around the mine, some of them don't even want to pour money into the exploration budget too much. They want to go and take that cash flow and go and acquire another company. So this is a way to profit off of it. You can just cycle back through. Everyone have a great weekend. I hope you're having a great weekend. And I will talk to you early next week. Okay, bye everyone.